Alright, so the problem we're going to do, the sample problem, is 23.3b. So if you want to read along, it's kind of a long problem, so note that I've created one of the worksheets that you'll have to prepare. There's another lurking in the shadows as well. Alright, so it says, Barley Inc. wants a projection of cash receipts and cash payments for the month of November. On November 28th, a note will be payable in the amount of $102,250, including interest. The cash balance on November 1st is $37,200, so they give you that. Notice I've placed that in our little schedule cash budget, entitled cash budget. So where you can get it, just put in the givens. Accounts payable to merchandise creditors at the end of October were $206,000. The company's experience indicates that 70% of sales will be collected during the month of sale, 25% in the month following the sale, and 3% in the second month following the sale. So, 2% will be uncollectible. The company sells various products at an average price of $10 per unit. Selected sales figures are as follows. So we have the sales in units of 50,000 units, so average price there times 10, that would be $500,000 of the actual sales in September. October, what you have here is 70,000 units times $10 per unit, so that's 70% or $700,000. And then we have an estimated sales amount of 90,000 units at $10 per unit, so that's going to be $90,000 sales in November. They also give you December's sales of 60,000. That's estimated, of course. That's kind of a red herring, meaning it's irrelevant to the problem, because when you're talking about collecting, or at least it is for cash receipts, that's in the month after the November, and is therefore not relevant, at least as far as cash receipts is concerned. Because purchases are payable within 15 days, approximately 50% of the purchases in a given month are paid in the following month. The average cost of units purchased is $6 per unit. Inventories at the end of each month are maintained at a level of 2,000 units plus 10% of the number of units that will be sold in the following month. So that's where that 60,000 estimated units in December will come in to play. The inventory on October 1st is 9,000 units. Budgeted operating expenses for November are $225,000. Of this amount, $100,000 is considered fixed, including depreciation of $40,000. All operating expenses other than depreciation are paid in the month in which they are incurred. The company expects to sell fully depreciated equipment in November for $9,000 cash. So notice I've placed a line in here for the sale of fully depreciated equipment. And so our instructions are to prepare a cash budget for the month of November, supported by schedules of cash collections on accounts receivable and cash payments for purchases of merchandise. Again, your head's probably going to be swimming when you read 23.3a, but make sure you format the problem right and just take it piece by piece, and you'll figure it out. Okay? So, starting, we've got our cash balance beginning of November, $37,200. That's a given. And to that, we're going to add, so cash beginning balance plus collection of receivables plus sale of fully depreciated equipment equals total cash available. So we might as well just put in this number, $9,000 for the sale of depreciated equipment, because that's a given. Anytime you can be given a given, you might as well just plug that in. Alright, so collection of receivables here is the big issue when it comes to cash collections. So, let's get started on that. And it says that the company's experience indicates that 70% of sales will be collected during the month of sale. Okay, so I'm not starting, I'm just reading. So note, I've done September sales under Schedule A, September sales, October sales, November sales, because if you read it, it says you collect a certain percentage in the month of sale, you collect a certain percentage the month before the month in question, which is October, and then 2 months prior to the month in question, you collect a certain percentage of sales on receivables. So we could start here. This is 70% times what? Well, if we sell 90,000 units at $10 average price per unit, that's $900,000. So 70% times $900,000 is $630,000, right? Okay. Going to October. So there we're collecting 25%. It says 25% in the month following the sale. So here, October, 25% of October sales are collected in November, and October actual is 70,000 units times 10, so that's